Ladies and gentlemen, good day and welcome to the Gujarat Narmada Valley Fertilizers and Chemicals Limited Q1 FY'25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Present from the management are Mr. D.V. Parikh, Executive Director and CFO, Mr. Y.N. Patel, Head of Department O&M, Mr. C.P. Darajia, Company Secretary and Chief Manager, and other senior team members of the management. I now hand the conference over to the management for the opening remarks. Thank you, and over to you, sir.
Good afternoon, and thank you very much for holding this call. We welcome all the participants to this conference on Q1 results of GNFC for FY'24-25. As you know, we have put up in the public domain the results, investor presentation as well as public release. The release was actually updated after the announcement of the results, and there is a new version which was made available yesterday itself because of the change in certain factual position of the investments. This is just to clarify so that people can have a look at it. I will cover in my discussion about the update as well. I'll cover two updates. One is on the business side and second is on the financials. On the business update, and before I go there, I'll tell you the three names which are introduced. Apart from that, we have our marketing colleague, Mr. Manish Upadhyay. He has joined along with his other colleague, Mr. Tejas Shah. In case of any questions relating to either operations management, projects or business strategy, Mr. Y.N. Patel will be answering those questions. On the marketing side, Mr. Manish Upadhyay will be answering. And any general question or on the finance related matters, I'll be answering the questions, and we'll introduce ourselves respectively while responding to the queries. Now, on the business side, as you know, we have announced that Board of Directors has cleared the investment proposal for investment into the weak nitric acid. The capacity announced is 200,000 metric ton per annum, which is expected to be around 57% increase over our current capacities on a per annum basis. This will also pave the way for investment in ammonium nitrate, for which approval for tendering has already been obtained. Apart from that, there is a development during the quarter. We have capitalized investments projects worth around 135 crore. There are 4 such projects which are capitalized during the quarter. One is on the ammonia tank, which is a double wall tank, which is built up, erected and now put into operation sometime in June. The second is a 4 megawatt solar power plant which is built to Dahej. Third is on the railway track renewal, for which around 7-8 kilometers of tranche has already been replaced. So these are, and fourth is on the desalination plant, 4 MLD desalination plant, which is capitalized in the books. We participated in the 100 MLD GIDC project at Dahej, and this will provide reliability in terms of water apart from reducing the cost. So this is on the capitalized project. Apart from that, there are 2 other projects which are ongoing and they are on stream and expected to be completed well on time, which is one is the investment of around 613 crore in coal-based power plant at Dahej, which is expected to commission sometime in April 25. And the other investment is into the additional ammonia loop, which will yield another 50,000 metric ton per annum, which is expected to be operational sometime in 26. On the fertilizer front, the subsidies are coming on well, and government has been working on 2 other aspects, which is in case of urea, renewal of fixed cost for various urea units and revision in energy norms. On the chemical side, the operations are stable, and the one turnaround which we have taken at Dahej is going to be operational by end of this month. So this is on the business side. Now coming to the financials, if we talk about volumes on a YOY basis, the volumes are quite positive, both in fertilizer and chemical. And on a QOQ basis, the volumes are good in chemical, and some optimization is done in case of fertilizer, and therefore the fertilizer volume, mainly the complex fertilizer, is lower. If we talk about the margins, the realizations in case of chemical on QOQ basis are improving, whereas on YOY basis it has tapered down. Going to the feedstock and energy, all the input costs have come down except for the oil. And because of the geopolitical reason, especially escalating tensions across geographies, probably the oil is not coming down. On the other income side, there is lesser income by around 10 crore rupees, mainly because of the increase in the working capital on a QOQ basis, whereas on a YOY basis, there is a 10 CR positive because of the internal accruals. During the quarter, there are certain one-offs of around 40 crore, mainly pertaining to the interest provisioning on the EPCG, some higher coal consumption, and the unproductive cost at TDI Dahej, which has impacted to the tune of around 40 crore out of the total results. So this is by and large things are on financial, although we are not reporting the balance sheet and cash flow on a quarterly basis except for a half-yearly basis. But there is no major change in terms of balance sheet item. The cash flow overall has been positive because of the internal accruals and the profit. So with this, I am concluding my opening remark and leave open the floor for any question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, if you wish to register for questions, please press star and 1 on your touchtone phone.
Yes. Yes. Okay.
Participants, you may press star and 1 to ask a question. Our first question comes from the line of Nirav Jimudia from Anvil Research. Please go ahead.
Yeah, good afternoon, sir. Thanks for these opportunities. I have a few questions to ask. So first on the TDI part. So if you can just help us out with respect to the losses on the TDI, which we have incurred in FY'24 and first quarter of FY'25. Along with it, if you also can share the production and sales data for TDI in Q1 of FY'25.
Okay. First of all, on the loss side, in the Q1, TDI2 losses are at 59 crore as compared to 35 crore in the corresponding quarter of the previous year. Like the whole year loss was at around 259 crores last year at TDI2. Coming to the volume of quarter 1, the production volume of TDI1 is around 5,000 metric ton and TDI2 is around 9,000 metric ton. The TDI2 volumes are little lower because of the annual turnaround taken in somewhere in early June.
Correct. So these losses, what you mentioned, are at the EBITDA level or are they at the PBT level?
No, at a PBT level.
Okay. So if you can also help us out, like the losses in the TDI have been coming down. So at one point of time, we had a loss of around 350-370 crores also. So has it something to do with the HCl which comes along with the TDI and where the prices have improved and those negative realizations which were there early is not currently there, and because of which the losses on the TDI is coming down? Is HCl also one of the factor? If you can highlight some bit on that.
So on a net basis, we do pay for the evacuation of HCl. Last year was quite a good year in terms of the production and sales of TDI. Number 2, the mix of sales, that is lesser of export and more of domestic happened last year. there was an increase in the market share as well as the realizations, which helped partially bring down the losses at TDI to Dahej.
Correct. And sir, if you can also help us out in terms of how much is the domestic market for TDI currently, and what would be our market share?
I am Manish Upadhyay for marketing side.
Yeah.
TDI market size is almost 1 lakh ton, 1 lakh 5 to 10,000 ton, and our share is almost 66,000. So almost 65%.
65%. Okay. So rest we may be exporting out, right?
Yeah, around some quantity we are exporting.
Correct. And sir, let's say if this shutdown wouldn't have been there, what would have been the incremental volumes at the TDI2 plant which we would have garnered on?
See, we do normally between 5 to 6,000 metric tons per month. Maximum is 6,000 at its peak. Otherwise, between 5 to 5,500 you can consider. So if we take 3 months' time, it is around, let's say, 16,500 metric tons should have been there. As against that, we ended up with 9,000 metric tons.
Correct. Got it, sir. The second question is on the urea side. You alluded that there has been some presentations to the government which would allow us to recover, or probably our fixed cost would have some sort of revision. So let's say vis-a-vis our actual fixed cost which we are incurring for the urea as well as what is getting compensated from the government, if you can help us with that figure.
Okay. See, there are more than one under recoveries in case of urea business. One is the fixed cost part of it. Second is on the freight part of it. The third is on the energy part of it. So predominantly there are 3 under recoveries which are happening in urea business. Now, if we talk about what is our actual versus what we are getting, there is, depending upon the volume, there is a difference between 5 to 600 rupees per metric ton. The government has taken the data of all the units for the purpose of reviewing and revising the fixed cost, but this is a mammoth exercise, so probably it will take some time, and also it depends upon the kind of burden which government envisages on its exchequer. So let us see what happens, but the industry demand has been since quite some time about the revision, for which at least some steps are taken in terms of collation of data.
Correct. So let's say if such revisions happen by 500 to 600 tons per month, would our losses be wiped out, which is like currently 30 crores on a quarterly basis, or still we would have some sort of losses because our energy consumption is high?
Okay. First of all, it is not 500 to 600 metric ton per month. It is 500 rupees to 600 metric ton per metric ton.
Per metric ton. Apologies, sir.
The 32 crore which you see in the segment as a loss comprise of more than one fertilizer. Like we have 2 fertilizer. The summation is for both the fertilizer. Now, answering your question, if we get, let's say, around 500 rupees per metric ton more, it will substantially reduce the under recovery. Secondly, we are trying to be efficient on the energy front, which is the Gcal per metric ton of urea. So if both we control well, it will at least, if not be positive, break even. Correct.
So let's say our energy consumption in Gcal per metric ton for urea would be closer to 6.5, 6.6, and what is getting compensated would be close to 5.8. Is this the right understanding, or?
That is not a right understanding. Our threshold, which is given by government up to 2025 March, is 6.2 Gcal per metric ton. Okay. And as of now in Q1, we are very close to it.
Okay. So and probably some modifications and the investment there would help us to reduce that energy consumption going forward.
So that is a constant effort to reduce the energy. But what happens if we reduce below 6.20? Normally units don't have much incentive because government takes the share of the balance and we get only a certain portion of the saving.
Got it. So last from my side is like we have announced this 200 KT of WNA and 163 KT of ammonium nitrate. So based on the input-output now, probably we would require some higher WNA for our ammonium nitrate. So if you can help us out like in FY'24 and in 1Q of FY'25, how much of WNA we have sold in the outside market? If you can, some understanding on the same.
I'll request Mr. Upadhyay to respond on this.
I'm Manish Upadhyay. Weak nitric acid we are regularly selling almost 6,000 to 7,000 tons per month on 100% basis we are selling in different grades. Last financially we have sold almost 25,400 rupees, 400 tons, and this financial year, this quarter, it was 22,500 tons approximately.
Okay, so 25,400 is a quarterly number what you mentioned on last quarter last year.
Yes.
Yeah. Sir, last thing from my side is we have seen the improvement in the profitability in Q1, specifically from the chemical side. So among the product basket what we have, is it safe to believe that was it because of the ammonium nitrate and the acetic acid where we have seen some sort of price increases and because of which this improvement in profitability would have happened on?
There are more than one product. AN melt is one of them. Second is technical grade urea. Acetic acid also amongst them. So it's a phenomena of more than one product.
Okay. So AN melt was not the single contributor.
No, it is one of the contributors.
Correct. And has aniline turned profitable for now, sir?
Yes.
Okay. So last year it has made profits?
Yes, last year also it made profits.
Okay. And there is an anti-dumping duty also on the aniline. So if you can help us out in terms of how much is the anti-dumping duty on aniline and how much it would have benefited us in FY'24, some sort of understanding there and the production volume.
I'm Manish Upadhyay.
Yes, sir.
1 minute. I'll just give you anti-dumping duty amount. Anti-dumping duties from the Korea, China and Japan on TDI.
Yeah.
Anyway, it is from China.
Yeah. So I was inquiring about the aniline part. So what was the production and the sales last year and how much would have anti-dumping duty benefited us in FY'24?
It is 36.9% from China.
Okay.
And it is from other than Wanhua and for Wanhua and other than Wanhua it is $121.79.
Correct. And so last thing, the production and the sales volume for aniline in FY'24.
Production up to June is 12,000.
April to June.
Yeah. I'm Vayan Patel answering your question. April to June production, if you get, it is around 12,000. And if you want a figure up to July also, it is 15,900.
No, sir, I was inquiring about FY'24. If you can share the figures for FY'24, sir.
I have to recall. Production, it will be matching.
I'll give you the sales figure. Sales figure will tell you what.
Yeah. Sales figure will also have because some would have been the nitrobenzene sales also.
Yeah. Last year aniline sales was almost 2,000 tons in April, May, June, and this year it was 11,200 tons approximately.
Okay, sir. Okay. Thank you so much, sir, and wish you all the best.
Thank you. A reminder to all the participants, if you wish to register for questions, please press star and 1 on your touchtone phone. Participants, you may press star and 1 to ask a question. We have a follow-up question from the line of Nirav Jimudia from Annual Research. Please go ahead, sir.
So the opportunity, sir, again. Sir, one question on the coal-based steam plant, what we are currently undergoing a capex of. So once it is commissioned, how much of our dependence on the outside gas would come down, one? And you mentioned something around 625 crores of CapEx for the same. What could be the expected payback period for the same?
Okay, I'm Devi Parikh. I'll answer your question. Currently, the gas which we are using is in the range of 200,000 to 225,000 SCM a day. With the resumption of this CCPP, it will be cut to half. Okay. Now, depending upon the gas and coal price, the economics are going to work out, but as per our current estimate, this is going to generate a saving of around 75 crore rupees per annum. So,
on an annual basis.
Yes. So in a way, if you talk about a simple payback, it is going to be roughly little between 7 to 8 years.
Correct. And for this ammonium nitrate and the WNA, the capex would be in the range of 1,200-1,300 crores, or it could be more than that?
It will be within the band of 2,000 crore rupees.
Okay. What's the projects put together?
Yes.
And what could be the expected commissioning of both these plants?
For weak nitric acid, the current time plan is around 33 months. Okay. And for the melt, it will be lower, around 24 months or so. Okay. So for the melt, we are going ahead with the new tendering. So we are trying in a way that both the things coincide, so that upstream and downstream is aligned together.
Got it. And sir, about the ammonia part, I missed in your opening remarks. So that 50,000 ton plant, when it would be commissioned and what would be the capex for the same?
Okay, that is covered. See, the ammonia loop is going to be commissioned sometime in 2026. Okay. What is your other question on ammonia loop?
Yeah, I was trying to understand the capex part of the ammonia and
227 crore.
Okay.
For the coal-based power plant, it is 613 crore, I said, and for the ammonia, it is going to be 227 crore.
Correct. And do we had any surplus ammonia in first quarter which we would have sold in the domestic market after consuming for our downstream products?
No. As of now, there is no surplus ammonia. On the contrary, at times we have to buy ammonia.
Got it. Thank you so much, sir, for answering my questions, and wish the entire team of GNFC all the best.
Thank you. Participants, please press star and 1 to ask a question. For any further questions, please press star and 1. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Yeah, I'm Chetna Dharaja, Company Secretary. Extend my sincere thanks to all the participants for active participation and interaction. I'm thankful to Anurag Services LLP for arranging this call and the moderator also. I also thank the representatives from the management team. Thank you, everyone.
Thank you. On behalf of Gujarat Narmada Valley Fertilizers and Chemicals Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.